Welcome to Financial Repression Authority's Roundtable Insight, where the best fund managers, economists, and industry leaders discuss the key investment issues and challenges in the current macroeconomic environment.
Hi, welcome to FRA's Roundtable Insight. Today is Monday, January 12th. I'm Richard Benuli, your host. Today we have Daniel Lacalle and Ira Harris. Daniel holds a PhD in economics and is chief economist at Tressis SV, has been ranked in the top 20 most influential economists in the world. He's author of several books, including most recently Escape from the Central Bank Trap and Freedom or Equality. And Ira is independent trader, past hedge fund manager, global macro consultant, trading foreign currencies, equities, bonds, and commodities for over 40 years. He was also CME director from 1997 to 2003 and also in 2019. Welcome, gentlemen.
Thank you very much.
That would begin, Daniel, with your view, your global macro view on the economy and the financial markets.
Okay. Macro-wise, I think that we are heading into another year of very poor growth, but growth nonetheless. So non-recessionary environment, not even in the euro area. I don't think you're going to see negative GDP growth in any of the euro area countries, but it's a very low quality type of growth, very low productivity, high government spending, low productive investment type of growth. Now, the United States, I think, is going to be again the country that steps aside from the trend of the G8. So I think that we're Japan, very low growth, UK, very low growth, Euro area, very low growth. Same with Canada. United States, I think, is going to deliver about 2.5 to it could easily be 3.2% in 2026. Driven by technology, so I think that and with real wage growth. So I think in general, a much better environment from that perspective. The rest of the world, strong growth in Asia, and that's basically India overtaken China with more subdued growth despite the very significant challenges of the real estate sector, but doing relatively okay. Again, thanks to technology growth. And in terms of markets, this is a year of monetary tsunami. Global money supply growth is likely to be significantly above nominal GDP, and that is going to help financial assets. It's going to help equities. It's going to help. It's showing in gold, silver, the dollar. It's the bubble of everything remains, and I think that it's going to continue because also, interestingly enough, this year, equity markets have become actually cheaper instead of more expensive. If you look at earnings growth in the United States and in the European Union, multiple expansion has actually driven in 2025 to an improvement in multiples. Small, but an improvement. So I think that it's going to be a good year for equities and a good year for silver and gold yet again.
Mm-hmm. What do you make of that, Ira? Do you agree with the G8 outlier view in the U.S. and the precious metals also?
Well, the precious metals are what the precious metals are. And I mean, we could see each and every day. I mean, I've been trading precious metals in many different facets for 48 years. Yeah, 49. It'll be 49 years, but with currencies. So I'm seeing things that are just, I'm much more right now of a trader of the metals than I am an investor. In fact, I did sell some stocks today as I'm rotating a little bit into the energy sector because on any type of relative basis, if this is wrong, then everything that we're looking at in the equities is going to prove to be wrong because I think the energy markets are trying to make, number one, they've had a lot of stuff thrown at them. And where will the energy go from here? I don't know. Everybody's banking. the Venezuela story will take a long time to play out. That's
yeah.
I mean, these people, I laugh because people who couldn't identify Venezuela on a map 4 days ago all became experts, and,
Right.
and the media just runs to them, and they don't care. They just need to fill their pages with whatever. But it's so ridiculous. More interesting was the way that the Exxon CEO and Trump kind of faced off over the weekend, because if you say no to Donald, and I'm not an anti-Trumper, and I don't care about anybody's politics, their personal politics. It does. If I have to put my personal politics in my trading, I may as well retire, because all I'm going to do is make one mistake after another. So I don't care about that. I care about the policy outcomes from it. And right now, the policy outcomes are very difficult to ascertain. I find more, and Daniel, you're sitting in Madrid, so you certainly, and your knowledge on Europe is something I have great respect for always. But it is interesting to see this play out, because the Danish are making noise because they don't like what Trump says about Greenland. But I'd be very careful from Europe's perspective, because they're not in a situation right now where they can afford for NATO to fall apart.
Yeah, I agree.
Right? And Trump is baiting them. Don't take the bait. Don't take the bait. Because, first of all, does NATO need to be changed? I'm a believer that for many, many years it's need to be changed, because Article 5 is really a problem. It's been a problem where the action clause is really a problem in today's world, especially with who's in NATO. So NATO really needs to be looked at and revamped. And it couldn't end right now, because Putin would be strengthened in ways that they've been trying to prevent. So that's not going to happen. So all these things, as we talk about, are playing out. And again, we'll sit here, and in 5 minutes we'll do another headline, because it's been about an hour since anything's hit. But I'm not as sanguine as you. I think that this. I'm in the camp that that sovereign debt is really an issue. Is it going to be in 2026? I don't know, because people have been talking about it one way or another for quite a while. It will bear its price, for the markets. When? I don't know. I don't know, because there are so many things at play in this world. But I do believe that especially the U.S. sovereign debt issue is a very serious issue, and the higher rates stay, the greater the cost of financing this debt. And now Trump wants to throw another $500 billion on defense. I just don't see it. But I think these are really good areas of concern. And need to be discussed. And, listen, I think the United States and Trump have made a big mistake in the fact that we now have German and Japanese defense industries that are ramping up to compete with the American defense sector, which has not been done in a long time. And so we have Rheinmetall, we have the French, you know them better than I do. We have Mitsubishi Heavy Industry. I mean, there are now a lot of competitors coming on to face off against the U.S. defense industry.
Yeah, can you elaborate, Daniel, on the sovereign debt situation in Europe and in the U.S.? Your thoughts, and how the whole geopolitical scene is playing out into that sovereign debt posture.
No, I completely agree that the problem is sovereign debt. No, the risk of 2007, 2008 was the real estate sector. The risk in 2001 was the technology sector. Everybody's talking about AI. AI is not a risk for markets, because AI technology investment is financed with very, very little debt. The problem is sovereign debt. I completely agree. And the problem is sovereign debt, but the ability of kicking the can further remains elevated particularly because if it was the problem of one country, as it was in 2008, 2011, when you basically said, oh my God, it's Greece, Greece, Greece. Now everybody talking about Greece. But now it's Japan, now 30-year bonds at all-time high yields. It's the UK, bond yields over the 2022 levels despite lowering interest rates. It's France with a completely unsurmountable deficit problem that is not going to be solved politically. All those elements are playing out. So the problem that I see is that and I think that we all agree there, is where you don't want to be is in the sovereign bond side of investment. You're not going to get real positive returns. But because it's a problem of everybody's problem, i.e. the UK, Japan, France, it's going to be a problem of Germany, because Germany is increasing debt, thinking that it's a tool to increase growth. They're not going to increase growth, and they'll get the debt. And obviously the United States. So you're basically going to continue living in a currency debasement environment. No? So I would not, I don't think it's going to be a 2026 problem. I think it is the problem of financial markets. And I think that the risk is likely to be that even if interest rates come down, if bond yields continue to absorb the entirety of the rate cut and go higher, as we have seen in many countries, it is likely to be a problem for markets of generating volatility if central banks go back to hawkish mode and make a policy, yet another policy mistake, no?
Yeah, I can't agree more. And I am bringing up, right. It was Greece, it was Spain, it was Italy, and as I say, the biggest thing for France is that French 10-year yields are higher than Italian. I mean, I tongue in cheek will say this is the greatest humiliation for France since 1871. I mean, Italy, my rates, I'm having to pay more. And to top that off, though, Daniel, when we look at Germany, now, the German credit card has facilitated these low yields across Europe. Yes.
Absolutely.
Right? We know that Greece and Spain, they bore a very heavy price to get their debt more in line. Italy, not as much, but Greece ran a primary surplus to get through those difficult years. Drove Giannis crazy, but needed to be done. Now, what happens? And Germany's really got some very serious problems right now.
Huge.
I mean,
they're not going to be solved by investing in bricks and mortar. It's not going to happen.
Yeah, and we saw it over the weekend. I mean, right? And we're not even sure what took place. Did they sabotage the energy? The power stations. So, and that's just the beginning of their problems. The AFD is not as noisy right now, but they certainly haven't gone away. And the more that the problems arise, and especially with the German credit card backstopping the entire EU project, that's why, Lagarde was not brought in for her economic acumen. She was brought in to be a politician.
Absolutely.
And if she leaves, and she's talked about it, it's not that we are putting words in her mouth. She's talked about the necessity of a capital markets union. And they need it now. Yeah. They can't keep delaying this, and that means that Germany's going to have to capitulate to allow this. So
I don't think that. Yeah, it's a great point, but it's not going to happen, because think about this: right now, the German situation is atrocious. No, the country has lost the competitiveness that it received from having the most advantageous energy deal with Russia ever. And at the same time, policy-wise, It has facilitated the destruction of the agriculture, the farming, and the automotive sector. That is difficult to achieve in such little time. So basically in China, I think that the government is basically saying more of the German policy, please, we like it. You have given us the future of the automotive sector. None of those elements are being addressed in Germany. In Germany, everything right now is being it's a big bet on government spending is going to solve it all, and that certainly is not the solution. But when Germany enters into that process, at the same time, you've just said it, the credit card is financing the other countries, so they are not going to be in a position in which they allow suddenly, once France is not controlling its deficit, Spain is not controlling its deficit, it's basically just hiding it with higher immigration and higher public spending. But ultimately, I don't think that Germany can afford right now to allow the capital markets open union that Lagarde so evidently defends, because it would be very negative for the German banks. Basically, it would be the worst for the German banks.
And if I could add, because you so eloquently talk about it, but it's not only China. You know, I'm sitting here, I'm watching they're not historic highs, but we're at 35-year highs on the euro yen cross.
Yeah.
And whatever, you know, it's not like Japan. China and Japan are the number 1 and 2 auto manufacturers, and if China is leading the way on the EVs, Japan is certainly the dominating force in the hybrids, because that's the way that they went. And German auto is not only being decimated by China, but the euro yen cross and the advantage that Japanese producers have in pricing on a global basis is phenomenal.
Yeah.
So Germany's getting hit with a 1-2 punch, and nobody is answering it. You know, I always go back to the 80s in my mind, and I think about what's his name, who was Secretary of Treasury, who put together the Plaza Accord. I'm really getting old. James Baker. What was his concern? It was the ability of, not only were Japanese producers so efficient, but they had a very weak currency, and he went after the currency. Yeah. Nobody in Europe talks about the yen. You know, nobody again, does. And it boggles my mind that they sit and they sit and they sit. And this is even with Japanese rates. Now, probably the Bund versus the JGB is probably as close as we've seen. I haven't run the chart. I will take a look at it. But that differential is probably into about 70 basis points. Wow. Yeah. That's been, and yet the cross keeps exorbitantly going higher. I think people are, by design, very, very negative on Japan. And I think in some ways, you know, there's a lot of political problems. But I think your point is Germany is, the auto sector, amongst other things, other high-level production, are really staring down the barrel of a double shotgun, China and Japan.
Yeah, China and Japan. Very, very good point. Also, in the defense sector, there is a huge problem as well, which is the regulatory side. We have heard and we've seen the headlines of the Rearm Europe program as a big driver, and there's been certainly a phenomenal trade in terms of the defense sector in Europe, and continues to be, in my opinion. Leonardo, and you mentioned as well. But the problem is, when you look at the real commitment, most of countries are not doing anything. And when I say anything is that they're basically shifting elements from the budget to call them defense. In the case of Spain, for example, the government wants to include environmental protection as defense, because it's defending the environment. No, So we need to be we need to be very careful. It reminds me of, if you remember, the phenomenal infrastructure trade in the first Trump administration, where everybody was buying Caterpillar and all those stocks that were going to lead this phenomenal infrastructure investment program. Never happened. So I'm very at least on the sides of the ability of European economies to really deliver on the commitment to defense spending that they're talking about, because I don't see it, and there's no political willingness. It's incredibly negative. You know, in the United States, if you say we're going to spend more on defense, I don't know, there are 75 million voters that are likely to like that idea. In Europe, we have a huge problem, which is that neither the Social Democrat voters or the conservative or however you want to call it, center-right voters are pro-defense spending. So that's a very challenging political situation, considering also the deficit and the demographic problem, which is phenomenal.
Mm-hmm. And what are your thoughts on the U.S. Coming to look at the Federal Reserve? Do you see the administration using criminal law now to intimidate the U.S. Federal Reserve Central Bank?
Yeah, of course.
You want to elaborate on that, Ira?
I'm sorry. I'm sorry. Come back at me one more time, Richard.
Oh yeah, in terms of what's happening in the last week or so, where the administration seems to be using criminal law as an intimidation on the U.S. Federal Reserve Central Bank. Any thoughts on it?
Yeah. I'll be interested in Daniel's perspective from across the pond, so to speak. But here, I find it reprehensible, because if this was the case, you should have built it and done this long ago. You know, when I look at Donald Trump, and again, this is not a political statement. I don't care about the politics. I care about policy. But with Donald Trump, what makes it so difficult, it's like he's like a 3-card Monte dealer in Central Park, in which there's 3 people watching who are distracting you from what he's doing. Everything's a distraction. Everything's a distraction. Whatever's going on in the world, it's a distraction. Well, but when I saw this last night, I said, you know, if I was Powell, I'd like to be in this position, by the way, because what happened? Again, the gold is exploding. Now, I always return back to Paul Volcker, who I have the utmost, to me, he was, probably with, there are those who will disagree, but with Schlesinger and Otto Pohl, these were great central bankers. Why? Yeah. Because they had the intestinal fortitude to deal with to say the criticism. We have a policy road that we have to go down. We're going to take criticism. The unions are going to criticize us. The banks are going to criticize us. The real estate, they're all going to criticize us. We get it. The farmers at some point. But we're going to have the intestinal fortitude to go down that road. And Paul Volcker used to say that gold was his enemy. As a central banker, gold is your enemy because it signals something, right?
Yeah.
If I was Jerome Powell after what Trump did, I would call an emergency meeting of the Fed today and raise rates 1%. And my reasoning would be, I'm trying to stem. The gold is telling us something. We've been remiss and not answering it. We're raising prices until we can see what. And Trump would have to answer to it because, he sits there and talks about how great the economy is. If I'm a journalist, with any integrity, I would say to the president, Mr. President, you say how everything is so good. Why is the gold continually going higher? We know that gold is it's an investment that doesn't pay any interest, and it usually signals that there's problems. Why do you think? And of course, Donald couldn't help but talk about it. He would not have any of the right answers, but he would have to speak to it anyway. But if I was Powell, that would be my response, because this was very belligerent, and so unnecessary, especially because he's in the final innings, as we would say, of his control of the Fed. And if he sits at the Fed, that'll be his decision to make. But I would go after it. So I'm just looking from there.
I think that the problem that the Fed has is that it's so long since the Fed has actually been data dependent that the lack of credibility is everywhere. No, if Powell today says, "Oh, we need to raise rates because gold prices are at all-time highs," obviously, a lot of people are going to say, "What the hell are you talking about? They were all-time highs in 23. They were all-time highs in 24, and you were cutting rates without a problem." No, so the Fed is now hostage to its conscious decision of abandoning monetary aggregates as an element of policy decision. That is the problem. Because if the Fed had been data dependent and followed monetary aggregates, they would have not massively increased money supply and cut rates in 2021 in the middle of a reopening that generated a ginormous inflationary burst. They would have not started to cut rates that so fast and so dramatically in 2023 just because of a slowdown in job creation. And they would certainly not have decided to delay the rate cuts because of neo-Keynesian perception that tariffs are the cause of inflation. If they had been data dependent and said, look, money supply is what we look at. Gold prices are telling us that there's a problem. And money supply is growing way too fast at 27% per annum rate. We need to curb that inflationary pressure, etc. If they had been consistent with what is a logical policy, then today they would have a tremendous amount of tools. Unfortunately, because they decided to be so discretionary and be data dependent once, then narrative dependent the others, then they have lost all credibility. And that is what Donald Trump, who's not stupid, obviously, and you're basically saying exactly the same thing, is preying on, is that because he knows that they have been completely, I wouldn't say political, but certainly narrative dependent. Now, what he is doing is using that in his favor. Obviously, he's going to say, oh, rate cuts and gold prices are not saying anything about the US economy. They're saying everything about the world economy or something like that. I don't even care. But the reality is that gold is certainly telling us a lot of things about the level of risk of inflationary pressures in asset prices. Inflation as in the destruction of the purchasing power of the currency, not CPI inflation.
Yeah, that is so beautifully framed. That's right. Because he does have leverage. Listen, Scott Bessent is not an idiot. I can disagree with him, but I would never demean his especially market intelligence. And that's been unusual because I think the Fed has been missing people who have a real market intelligence and how to respond in certain ways and read certain things. He understands that. But this could wake Powell up. I mean, if Powell wanted to go the way, of course, the Fed's going to have to bear responsibility with it. He doesn't get a free pass, as you rightly talk about. Because, first of all, every time I listen to the press conferences, which I do, unfortunately, but I listen to the Lagarde press conferences too, but I keep waiting for a journalist who's sitting there to ask Mr. Powell, Mr. Chairman, does a higher gold price bother you?
Yeah,
I know that. What's the name? Sorkin asked him that in that interview. It's probably over a year ago. It's probably a year, maybe a little bit more. And Powell's comment was he saw, and this is an exact quote from him. He saw gold like he saw Bitcoin. They're both speculative. And of course, Sorkin didn't follow it up because it was like somebody handed him the question to ask and he really didn't understand. Had he pursued it with a follow-up question, we may have actually learned something. And I just want to learn something. Does this bother you at all? Does it only bother Daniel and Richard and I as we say, why is the gold there? In my mind, I've been saying it for years, it's a measure of in a fiat world currency, it's a measure of central bank credibility.
Oh, absolutely.
Right?
Perfect.
That's where we've
Absolutely.
come to.
100%. The best definition. The best definition.
When they talk about inflation, if you're buying gold because you fear inflation, you're chasing something, and that's because right now we haven't had inflation, right? So how do you explain gold going up now?
Yeah.
Right? We've been at 2.5, 2.7, and Europe 2.1, whatever the numbers are that we have to live with. And yet gold continually climbs.
Meet the Cedar Owl, a new economics and finance publication with a focus on environmentalism. We combine the Austrian School of Economics and market environmentalism principles for investing in a sustainable future. Follow the link in the description to get to know the Cedar Owl better, understand our values, our mission, exactly where we're coming from, and the type of content that we release on a cyclical basis every Thursday. Join us in targeting outperforming portfolio returns while making a positive impact on society and the environment through technology. Subscribe now for weekly insights, investment articles, and exclusive content.
And the problem with journalists is that journalists have been fed with the same reverse logic, which is whatever suits government spending and government deficit is the mantra of macroeconomics. That right now, when they talk about gold, they think that it has no connection with sovereign debt. They have no connection with anything. I find it fascinating. You said it. I find it fascinating that no one is going to a press conference of Miss Lagarde, Mr. Powell, and asking, are you worried about the fact that gold has overtaken the US dollar and the euro in the global central bank's asset base? Does that mean? And no one is asking this question.
Yes, that's such a great point. And then there are those who say, well, the United States will just revalue gold. But as I sit here, and you're in Madrid, so Madrid has 500 years of history of this. If you do that, well, first of all, we don't know how much gold the U.S. really has.
That's right.
Right?
Yeah.
We know the IMF has gold. We know Germany has gold. We know Italy has gold. Europe has a lot of gold. So we go back. I always go back historically to the 1974. You may be familiar. I don't know where Henry Kissinger was talking to the Undersecretary of Treasury Thomas Enders in a famous discussion, and Europe was getting ready to use gold as a reserve very openly. And Kissinger was worried. And he told them, well, we'll just flood the market with whatever gold and we won't allow it to happen. Well, right now, with what we know about what central banks have done, if the United States were to revalue gold, China, Russia, Germany, Italy, Spain, they would be in a much better position because it would be revalued on a global basis. That ship has sailed. So if you're thinking...
Yeah. By the way, the moment that the United States revalues gold, it is admitting what you've just said, that the price of gold is the reflection of the credibility of the central bank. It's basically admitting that the US dollar is not the world reserve currency anymore.
Yeah, great point. So, I'm sorry, Richard.
Oh, no, go ahead.
No, I'm done. I'm done.
What are your thoughts on platinum? Do you see much buying of platinum in Europe with concerns of potential capital controls on gold and silver?
There is a little bit of inflows, but not enough. In fact, if you think about it, ownership of gold in investment funds in Europe is very, very, very low, very low. Europe is still in a situation in which the belief in the European Central Bank as an almighty and never wrong entity is driving most of the investment decisions. That's why most investment funds have been piling on French debt as it went down instead of getting away from it like there's no tomorrow. So no, I don't think that is something that is I would say a huge bet. I like platinum from the perspective of relative value, no? Huh? But obviously we need to understand that what is driving gold is demand for central banks. What is driving silver is demand from the energy transition, electric vehicle, all these things. Platinum is not the same. Platinum is not the same. A friend of mine said the other day, don't bet so highly on platinum because people don't sell records anymore, so there are no platinum albums.
Okay. Yeah, that's right. What are your thoughts on the Venezuela event and the effects on Latin America, LATAM, implications to the economy, financial markets?
Implications for the economy. I would start by saying what Ira said at the beginning. Thinking that Venezuela is going to go from less than 1 million barrels a day to 3.5 million in a couple of years is ludicrous. And thinking that this is going to be a gold mine for oil companies, not true. There are reasons to buy oil companies and energy and the energy sector for relative valuation, for the disconnection with oil prices, a lot of things, margins, etc., but not because of Venezuela. Venezuela is going to be a massive capital expenditure first, and then maybe returns. It's going to require at least 120 billion just to recover PDVSA. So that's on the one hand. Now, why is the situation in Venezuela important? Because a lot of people in the United States, a lot of people in Europe talk about Venezuela as if it was a single country that doesn't matter. But no, Venezuela is the center of an international alliance of countries, dictatorships that have two objectives. Number one is obviously to enrich the leaders of the Venezuelan and their allies' pockets. You've seen how Maduro has 3.8 billion of wealth. That is not easy to achieve in a Bolivar salary. But second, very important, is that this alliance has been spending the oil wealth coming from Venezuela, coming from Iran, etc., to build an alliance that was basically financing every effort to demolish the international institutions, both in international multinational institutions, but also in democratic institutions in countries like Colombia, like Chile, like Mexico, like Argentina, etc. So it's not a small country that doesn't matter. It's a country that matters a lot, and it is a problem of national security for the United States, because if they allow the dictatorship of Venezuela with the dictatorship of Cuba, with Iran, Russia, and China to rain on billions of dollars every year to finance all these things that they're financing all over the world, it's going to come back and bite you very, very quickly.
Mm-hmm. And your thoughts, Ira, on that?
I mean, really, nothing more. That's 100% right. And I'll tell you who's now really comfortable, because Chevron, not just with Venezuela, but the oil assets in Guyana just got more secured for the near term anyway.
Absolutely.
And that was because Maduro was making noise and he knew it was an issue where, Daniel's point is so well taken, because we have a tendency to think that the United States is the only one who can create mischief in the world.
Yeah.
All of these entities are capable of creating mischief. The Chinese can create mischief. The Russians can create, we know the kind of mischief they can, but they all have the ability. And when Maduro is financing Hezbollah and other non-state actors who are looking to create crisis, look at when there's chaos in the world, it benefits a lot of entities who are looking to create upheaval and noise. So yes, that solidifies it for a moment, just like, probably Trinidad, Tobago with its huge natural gas infrastructure and wealth, and Guyana. So there is some time, and now we'll see what goes on with Cuba, because Cuba we go back to January 1st, 1959, the days when I was a Marxist. Oh, and I'm not that old, but I actually had wanted to go to Cuba in 1972 to cut sugar cane and build prefab homes. And
oh, really?
Yeah. Somebody knocked on my door and said, "Not a good idea," because it's forever. So I thought better. But I mean, Cuba becomes an issue. Because I always come back and look at Cuba and I go, why doesn't anybody concerned that the United States still has a naval base in Guantanamo? Right? We make noise about Crimea, but tell me how Guantanamo is different than Crimea. And I know the United States will say, "Oh, we have a lease." Yeah, we have a lease that was done at gunpoint more years ago, and it does the same thing. Guantanamo and Cuba, which it always did, protects the flow of energy and food out of the Gulf of Mexico.
Yeah,
look at it on a map. Crimea for Russia protects the Bosporus Straits.
It's a good point.
Because it gave it a naval presence at Sevastopol. So, I mean, so many of these are similar. And the ability to create chaos in the world is really great. And I think Daniel's point is very well taken about that.
And expanding on that, do you see any geopolitical investment risk in Westerners, or especially from the U.S. Americans, investing in, say, Colombia and Brazil, considering they have been against some of the actions?
No, I don't see the risk. I don't see the risk because, you have to remember that a lot of what is going on in headlines these days, there's a lot of talk and very little action. If you look at the inaction, it's actually quite staggering. Gustavo Petro, the president of Colombia, and Ms. Sheinbaum, the president of Mexico, may say a lot of things in public, but what matters is what they do. And what they're doing is literally nothing. And more importantly, what they're doing is requesting a telephone call or an agreement with the United States. I think it was today, if not last night, but depends on the hours. Today's comments from Claudia Sheinbaum were very, very important, because what she said was, there is absolutely nothing that we can do as a nation to directly oppose the United States. And what we need to do is to find the common grounds to defend our interests and theirs, because there's an incredible number of Mexicans in the United States and an incredible number of Americans in Mexico. So that message, conflict, it's a direct conflict with the sort of heavy-handed and ideological messages that they gave just a week ago. So I don't think there's going to be much risk there.
Mm-hmm. Yeah, that makes sense. Yeah, your thoughts, Ira?
That's a great point. That's a great point. And in making that point, I can't agree. I agree 100% with Daniel on that. And I'm bullish Brazil, because Brazil. I would say that Peter Navarro elevated Brazil, but that's a far different topic discussion. But going back to Venezuela, one of the things that bothered me about when Trump took Maduro out, but at the same time he was busy dissing what's her name, who won the Nobel Prize, the Peace Prize,
Maria Corina Machado.
Yeah, he didn't raise her up and try to parachute her in, right? Yeah. Even the Greeks, when they got rid of what's his name, Europe sent in who they wanted to. Here was a woman with international standing, great credibility, and he's dissing her rather than saying, we're going to bring her in because she actually won by a lot the previous election that Maduro had stole. He didn't do that. And on the first night, I go, why wouldn't you do that? That has a lot more legitimacy. So something told me that more was going on. But as far as Brazil, Mexico, I still see them as very investable. Lula is very clever. I mean, when you go back to look to see what he did and the way he operates, very clever. He's really opened up China. The Brazilian farmers are doing very, very well. And interestingly, we haven't talked about it, is that China is allowing the yuan to strengthen every day.
Yeah.
So that will become a major topic for what's going on, and which is why I believe it's positive for natural resource companies around the world, because the Chinese are signaling, well, if we're letting the currency go, we're going to start just like they did during COVID when they let the currency strengthen rather than weaken because they were busy stockpiling everything that they needed. So for some reason here, it may be that they want to enrich their middle class. We'll go back to the arguments that I know that Daniel and Michael Pettis, two economists I have great respect for in the global, have talked about it. If you're really going to enrich your middle class, you have to let the currency go, and the paradigm of a weakened currency to gain on a global competition, that's gone. That's gone. You now have to go to the next level, and I know that Daniel has spoken about this. So that's where we're at. I'm positive about the world economy in that way. I probably less so than the U.S. I want to be other places, and I want to be the U.S. And it was interesting last night when the U.S. stocks in the Sunday night market were getting hammered pretty good. Europe opened stronger and continued to rally, which I thought was very interesting.
Just coming back to the point of Maria Corina Machado, I think that what has happened is that the U.S. administration found, surprisingly, that the opposition to Maduro didn't have a government, a shadow government, and a plan to really come into power. So I think that is basically the reason. And she is going to go to see Trump this week, and I think that is going to be a big change. But it's basically because one thing that the U.S. administration, I believe, doesn't want in Venezuela is a Syrian situation in which you basically remove the dictator and suddenly there's nothing. No? Mm-hmm. So that's why it's a completely different scenario.
Mm-hmm. And Daniel, that's a great point because, some of these decision makers, policymakers, are affected by the academic look of that all these things, because the models predict linear outcomes. There is no linear outcomes here. We are so early into that. We don't even have the first batter up here as to what could take place in Venezuela. And there's a guy who I happen to know very well personally, who's really watched Venezuela. He's at the Center for Economic Policy Research. He's with Dean Baker in Washington, but he's watched Venezuela and he just put out a piece. Mark Weisbrot. Yeah. Brilliant guy. I mean, I've known Mark with grammar school. We go back a long way. I haven't talked to him in a while, but I do follow. So pay attention to what the people on the left are writing, because they're going to give you insight that the administration is going to miss, because the administration is too based on linear outcomes, and those outcomes are just not assured in any way, shape, or form.
Yeah. I think that one of the key elements in Venezuela that people tend to forget is that a lot of the things that we adhere to ideology are basically just money based. No, so a lot of the people that are currently saying, "Oh, we are with the Chavez regime, etc." They're only with the Chavez regime because they made a lot of money. Freezing Maduro's assets is shifting a lot of people to be defenders of democracy very quickly. Huh?
Yeah. It pays to be a Democrat for this week.
And just a final question on investment asset classes, generic asset classes. Daniel, what are your thoughts given all these risks and trends? Are you still bullish on gold? You mentioned some of the LATAM markets. Do you like those for either equities or corporate bonds?
Latin America, certainly I like corporate bonds, and I think that there are good opportunities in the sectors that are more close to industrial investment in general. So I think there are good opportunities in Latin America. You're basically paying very, very low multiples, and there are good opportunities in general. I always avoid, as a religion, any state or semi-state owned company. I don't care if they go up. I don't own them, because they always can give you a very negative surprise because the minister has called them to cut prices or whatever. I think that it's still a bullish case for gold because of the growth in money supply expected for 2026. Also for silver, I think gold and silver likely continue to be positive. And in terms of bonds, I like credit, but I don't like investment grades. Very, very expensive. Obviously doing well, but very expensive. I don't like sovereign bonds. And in terms of equities, I still like the US. I still like the US because the combination of buybacks and relatively higher margins and much better earnings is positive. I like European stocks, but I would start to avoid the banks that have done phenomenally, just as a taking profit, no? And also what I said about the defense sector, take some profits over there as well. Basically equities, gold, silver, a little bit of commodities, and I like the energy sector here. I agree with Ira there.
Interesting. And do you align with that, Ira? Or
I'm very much in line. I still own Commerce Bank. I've cut my position probably by 65%. And that was back in the year because the run up, I'm still at the end of it, I'm a value seeker. Not only that, but I look for high quality companies. I still think Commerce is going to wind up in somebody else's pocket. So I hold a rump position. I don't know who's, I know there was no way the Germans were going to allow the Italians. We got the same problems, of course, with the large Spanish banks and large Italian banks. But it's been a very, very interesting run in those regards. I don't have a big energy position yet. I'm just starting to working off some of my metals because I think the run there is, I'm being very selective. I still like the metals until I see much more credibility from central banks. I will, or for them to say, hey, we've got real concerns here. And I keep waiting for the question to be posed. So I look at that. Europe, I'm trying to figure out here because they've got real problems, and Daniel's right in the hot seat of it and sees it. And it brings a chuckle to my face every day when I see Italian yields below French yields. The French got a lot of problems they got to work out. But the one thing the French do have is their nuclear energy. They never let go of it, and it is proven to be a great asset to them, no matter how badly the government tries to screw it up. I believe that Macron has to go. He has not been good for Daniel and I over the years have laughed in some ways about him, but it's time. France really needs to step up here in a lot of ways and not just try to be riding the coattails of Germany. And the Germans have their issues, and the politics in Germany are to be watched. It's one of the things that makes me a little nervous about Europe.
Yeah.
But, I think in the rest of the world, there's really growth potential, between Africa and certainly parts of Asia, and Japan will be interesting. Watch for, there might be a snap election called in Japan. And I think that's weighing on the end because people just don't know about the outcome and the fiscal stimulus plans of Takaichi are serious and are weighing on the currency. But a weak yen is really posing problems for a lot of countries, a lot of advanced countries in the world. So just things to watch. I still am bullish the Japanese financial system, and that's actually been doing really well. Probably more bullish there. And one last thing that we didn't talk about was Trump putting the 10% cap on credit cards, right? You saw that, Daniel? That came out over the weekend before we saw the Powell. And I thought that was interesting because it's such a populist measure. Now, if I'm a journalist the first person I go to ask is Liz Warren, because this is an act of Liz Warren.
Yeah, very much so.
This is what she's all about. She should be out dancing, and celebrating but this is a political act because, he's trying to garner for the November elections and to hold Congress. Yeah. So this is what this is about. But this is right out of Liz Warren's book. And yet, the banks, JP Morgan's down a little bit. Goldman's not even down.
It doesn't affect them. Yeah. Yeah.
So I would watch these bank stocks just to see, because this was just the first shot fired about, in a populist maneuver by the Trump administration, the 10% cap. And I'm not agreeing with it or disagreeing with it. I actually thought that, some of these, when Liz Warren was projected to be the head of the Consumer Protection Financial Bureau, that some of these things were really well warranted. But it's just something else to watch. So I'm looking for high quality companies. I'm not looking to buy ETFs. I'm looking for high quality companies, and we'll seek them.
Great. Yeah. Good insight. Good investment ideas. How can our viewers and listeners learn more about your work, Daniel?
It's very easy. I always say that it's easier to find me than to avoid me. So just key in Google Daniel Lacalle. You have my UK, my English speaking account, my Spanish speaking account. You probably end up bored of finding my stuff.
Okay. Yeah. Great. Exactly. And Ira.
Daniel, are you still teaching?
Yeah. Oh. I have a class actually in an hour.
Okay, I'm coming to Madrid to sit in.
Excellent. Yeah, come in.
I've never been to Spain. I'm due for a trip to the.
Know that you are invited. If you don't advise me and tell me in advance,
I will send you an email.
Very angry.
I will send you an email. So that's where you're going to find me in Daniel's class. We'll be hanging out and drinking lattes and be done.
Okay. Great. Thank you so much.
Thank you.
Daniel and Ira. Thank you.
Great.
The FRA Roundtable Insight Show is for informational and educational purposes only and should not be considered as a solicitation or offer to purchase or sell any securities. The investments, investment strategies, and investment philosophies discussed or presented on the show each involve their own unique risk factors which are not discussed on the show. Any discussions among the panel participants or responses to listener inquiries are based on the personal opinions of the panel participants and do not take into consideration the listener's suitability, objectives, or risk tolerance. Please be advised that you invest or speculate at your own risk.